Bloomberg Audio Studios. Podcasts, radio, news.
American CEOs have been trying to avoid talking about how tariffs will impact their business for a while. But this earnings season, something is starting to change.
After months and months and months of us calling companies and CEOs saying, what do you think about tariffs? What do you think about tariffs? We're seeing them have to actually start making decisions for tariffs.
Shelly Banjo oversees Bloomberg's business coverage for the Americas. And as she sifted through a recent flurry of reports from Q1, one thing became clear. The time for ignoring Trump's trade war is over.
What we are seeing now with this earnings season is that they have to quantify, okay, this is going to be our projected hit to our profits, to our sales, what have you, to the tariffs. Here are some of the business decisions we're starting to make.
One of the most sobering projections came from General Motors, which just lowered its earning guidance, saying it could suffer as much as a $5 billion hit from auto tariffs.
And that is the largest sum that we've seen quantified yet among companies.
But Shelly says not every company is approaching these economic headwinds with the same level of urgency, because there's no one playbook for how to respond to tariff whiplash.
I had to sort of figure out, okay, how are these companies wading through it since no one's really telling them what to do? Came up with these sort of three scenarios from what we've seen people doing so far.
Scenario 1, ride the tariffs out.
So there's a bucket of companies that are like, we still don't know. It's too soon to tell.
Scenario 2, adapt to a new normal.
Companies that are, we know that there's going to be a tariff hit, but we think we can rejigger our business to be able to absorb it. So that means let me furlough employees or cut staff or hold up on buybacks.
And then there's scenario 3, the General Motors route.
Then there's this third bucket of companies, which are sort of a holy, what moment.
As earnings season forces some companies to get real with their shareholders and the public about the impacts of tariffs, just what picture are they painting for their future? And what could that mean for their bottom line? I'm Sarah Holder, and this is The Big Take from Bloomberg News. Today on the show, what corporate earnings are revealing about how companies plan to weather the trade war and what it will mean for supply chains, stocks, and prices. Bloomberg's Shelly Banjo says looking at these 3 buckets of business reactions to tariffs can serve as a guide to understanding how U.S. companies are navigating uncertainty, shifting their strategies, and communicating their path forward. The first bucket are these companies that say they won't see much, if any, effect from tariffs. They're kind of waiting and seeing, but they might be a little bit more insulated. What businesses are we talking about there?
So pharma is a big question mark right now because so far they've been spared from a lot of tariffs. There's a separate sort of investigation that they're looking into that are going to be sector-specific tariffs on pharma. 232 tariffs they're trying to figure out. Is this going to impact pharma? So right now, it is sort of defensible for a company like Pfizer to say we're not exactly sure what's going to happen. That being said, a lot of their competitors have come out and said, well, we think it's going to impact us by X $100 million at the very least. They're giving investors some sort of indication of how and when and why this would hit.
Would you say that this first bucket of companies is being Pollyanna-ish about their expectations for how tariffs will affect them?
I think it was the norm a few weeks ago to say, we don't know, this is going to exclude tariff impacts because we just had a lot less information. Now that we have a little bit more information, it becomes a little less defensible to model out because some of the decisions that you're making now for the remainder of the year, you really have to make them now, not having a full picture. Trump is going to change his mind probably or change things. So this whole idea of we have to wait and see because Trump could change his mind is a defensible argument. But if you are running a big multinational global business, it sort of seems a little Pollyannish to say, well, we're just going to wait and see what happens.
Okay, so let's talk about the second bucket, which are the companies that will face some tariff-related challenges, but might ultimately be able to work around them.
So some of the companies that came out and said that recently this week was Coca-Cola, Altria, the cigarette maker. These companies said, you know what, we fully realize that tariffs are here. They are baked into our forecast. They're baked into our outlooks. But We think we're still going to be able to absorb them as long as they stay the way they are because we'll move things around. These particular companies didn't get into some of the specifics, but different CEOs that I've spoken to said there are multiple levers you can pull. You hold your CapEx, for example, like you don't build that factory that you're going to build. You maybe put a pause on share buybacks. We saw that with General Motors this week. Or you put a hiring freeze. You don't go into new business lines. There are going to be companies who are going to have to cut a lot deeper, and that's going to end up hurting those companies. But there's a sort of bucket of companies that are saying, so far, this is manageable. It's not going to be great. We're not going to grow, per se, like as much as we would love to, but we're still going to be able to be okay.
Thinking about adaptations, government data released yesterday showed a surge in imports from companies that are looking to take advantage of the president's 90-day pause. Is that something you're seeing in terms of how companies are working around these tariffs, preparing now for future pain?
Definitely. We saw that with the car companies. So they had a huge run up in car sales because think about that. It's a big ticket item. You've been thinking about it. You've been talking to your family about buying a car. You maybe visited a couple of car dealerships. So you think to yourself, okay, if I'm going to buy a car in the next 6 months, now's the time to do it before it gets more expensive. The issue we're running up against now with the cars is how much more inventory do you have left of that tariff-free inventory? When are companies going to start to raise the prices? We had one CEO of a company that makes consumer product goods that you can find in like a Home Depot or a Target come in and say, you know what, this year the best sale might just be Mother's Day, which is not something you normally think about. But if you think about the holidays, many months from now, sure, you might be 10, 15% off. But if everyone's going to start to raise prices in the next couple of weeks, your cheapest price for that product might be right about now.
So CEOs are telling you, we are now starting to adapt to this. We're starting to plan for this. But why weren't they planning for it before Trump even got elected when he was talking about this constantly on the campaign trail?
Yeah, that's a good question that I've been asking. We had someone in this morning that said, well, nobody knew this was going to happen. And I said, well, nobody wanted maybe this to happen. But if you were listening to Trump on the campaign trail for many, many months, you knew this was going to happen. I think the issue is that it never felt certain. There wasn't like, okay, this is what's going to happen. Here's the percentage rates. Here are the countries that are going to be impacted. It was always this very broad, we're going to bring manufacturing back to the U.S. We're going to give tariffs to everyone around the country. And you can't really manage a business unless you have the specifics around that. You did see companies, even since Trump 1.0, building up their infrastructure and manufacturing in the U.S. A lot of pharma companies, Johnson & Johnson, for example, Eli Lilly, creating manufacturing capacity in the U.S. over the last few years. But I think a lot of CEOs were sort of waiting for specifics.
When we come back, Shelly and I dig into bucket number 3, the companies that know for sure that the tariffs are going to be a big blow. We talk about how they plan to navigate those challenges and what those plans mean for investors and consumers. Today, General Motors cut its profit outlook by billions of dollars. After grappling with the effects of auto tariffs on its business, it revised its outlook from as much as $15.7 billion down to as little as $10 billion. The motorcycle maker Harley-Davidson withdrew its forecast for 2025, saying tariffs could cost them as much as $175 million this year. GM and Harley are examples of companies that can't take a wait-and-see approach to tariffs. They're in that third bucket of businesses that Bloomberg's Shelly Banjo has been tracking.
These companies are sort of seeing, the rubber is hitting the road. We saw Kraft Heinz saying we need to start managing our business for a decline in consumer demand. And you saw JetBlue saying not only are we shifting our business because of worsening economic demand in consumers, but that it's getting worse. Like things are not good and they seem to be getting worse.
What other sectors and companies might be most impacted?
I think here the consumers really the problem, the ones that are really consumer focused, because you're getting dinged by a lot of things. You're getting dinged by high prices, by how hard it is to move supply chains quickly enough. You don't have that customer base that is really locked in. I mean, consumers have so much choice that when it's cheaper somewhere else, I'm going to go somewhere else pretty easily. And so that's, I think, the biggest weakness we'll see is a lot of these consumer companies. So we saw companies, CEOs of Target, Walmart, others go up to the White House and sort of tell Donald Trump to his face, there will be empty shelves come the holiday season if we don't get a little relief. So what a lot of them are asking for is, could we have a little bit of a grace period to shift some of our production? Could we, can you work with us here? We want to move some of our production. We want to move some of our manufacturing, but it's not something that can happen overnight. So that's sort of what they're asking Donald Trump and the administration for.
How long would that grace period have to be for them to really prepare?
It depends who you ask. I mean, there are some people, car factories, for example, who say, it takes 4 or 5 years to build a plant. So there is one strategy of just waiting out the administration, right? Like you take pain for 4 years rather than build a plant that you might not use. It's going to be higher cost. I mean, that is certainly a strategy that we've seen some companies talking about. Some of those wait and see strategies might actually be waited out strategies, but we don't really know for sure. Some companies have talked about we can move a whole bunch of production within 6 months between maybe China to India or China to Vietnam. It's much harder to move something from China to the U.S.
When you're looking at the earning reports and seeing companies sort of admit to themselves and to investors that tariffs are going to have a major hit on them, what kind of numbers are you seeing? What is the magnitude of that challenge?
So right now, it is not as big as one would think. I mean, so far we saw GM come out with the biggest number yet at $5 billion. Before that, we had seen things like $200 million, $500 million, $850 million, depending on the company. As earnings season plays out, we're going to start to get even more specificity from the Trump administration on the tariffs, and then we'll start to see the different impacts. And all of these are projections. So what we'll get next quarter is what actually happened. The more worrisome sign, though, is this hit to innovation. We talked to a couple of companies that said, well, we're not going to launch a new product this year because it's too dangerous, it's too risky, and it takes a lot of money, and we don't even know if we're going to get it produced in the place that we want to make it. So at that point, you're stopping companies from actually coming out to even launch new things, which come Christmas time is going to mean that a lot of the hot new items won't actually even be there.
Less investment in innovation could also mean lost jobs. Private sector numbers released this week by ADP showed a sharp slowdown in hiring. And that unease could also show up in tomorrow's jobs report, which will be the first to reflect President Trump's Liberation Day tariffs.
When you're talking to companies, all of a sudden job postings are disappearing. They're not filling those jobs. With the big companies, you haven't seen huge layoff numbers yet. With a lot of the smaller companies, like the one I was saying about with the innovation, they were saying, well, we don't really need a new product development team right now if everything is paused. And so I had said to that CEO, well, are you furloughing them? And they're like, we're just going to fire them because we'll bring them back when we can. But right now, there's nothing for them to do.
So they're making sort of short-term decisions that might have long-term impacts.
Exactly.
Based on the current uncertainty. What are the warning signs for investors? Is there sort of a canary in the coal mine in these earning reports that they're looking at right now?
So this question has been very interesting to me. The first couple of companies that came out and said tariffs are going to impact us and here's how and here's why, a lot of them we saw their stocks go up. And then companies that said, oh, we can't quantify the impacts of our tariffs, we saw the stocks go down. And I asked my reporters what is going on. And we spoke to a number of investors, a number of analysts that are saying at this moment, CEOs are actually getting rewarded for their honesty. They're saying, we are going to manage this business as if there was a recession coming. Ed Bastian, the Delta CEO, was one of the first CEOs to stand up and say, I don't know if there's a recession. We might not know if there's a recession, but I'm going to manage this business as if there is a recession coming. I'm going to batten down the hatches, reduce my costs, really be careful about any sort of hiring or anything like that. And stock went up. And I think this idea of investors and analysts rewarding these CEOs of actually taking this seriously and actually managing their business for the time that we're in, rather than managing the business for what they hope might happen.
Is there going to be a point at which the Trump administration needs to take some action to help out some of these companies? and these sectors?
Well, I think you're seeing that now. So this week you saw the auto parts tariffs exemptions and Donald Trump coming out and saying, okay, we see you auto companies. We see you're trying, you're moving production, you're stopping production in different parts of the country. Like, we're going to give you a break on these auto parts that really will cripple you. So I think you sort of have these companies doing this calculus saying, we know we're not going to win everything. What can we ask for? What is a manageable thing to push for?
Is there a point at which the negotiating power might switch and companies might have more power to ask for more of what they want from the Trump administration?
I mean, that's the question, right? Is that it wasn't the media, it wasn't Trump's advisors, it wasn't a number of different factions that sort of had him rethink his tariffs. It was the market. So is the market sort of this last big, force that Trump takes seriously? So if we get to a point where the stock market continues to go down, where consumers stop buying, where jobs start dropping, where there's nothing else that you can really argue with, then maybe that's when we start to see some more of those concessions. I don't think we're there yet at that point, but you are seeing like these different negotiations happening, and then that makes it even harder to predict what's going on, because then you can't even count on that. You can't even count on these big tariffs that are impacting, because if they're going to be switched and reversed anyway, you don't want to build a new plant if you're not going to have to.
This is The Big Take from Bloomberg News. I'm Sarah Holder. This episode was produced by Alex Tai. It was edited by Patty Hirsch, Aaron Edwards, and Catherine Larkin. It was fact-checked by Adriana Tapia and Rachel Lewis-Krisky, and mixed and sound designed by Alex Sugiura. Our senior producer is Naomi Shavin. Our senior editor is Elizabeth Ponso. Our deputy executive producer is Julia Weaver. Our executive producer is Nicole Beamsterboer. Sage Bauman is Bloomberg's head of podcasts. If you like this episode, make sure to subscribe and review The Big Take wherever you listen to podcasts. It helps people find the show. Thanks for listening. We'll be back tomorrow.